What matters to most people is knowing if they will do well in life. And the best way to achieve that is to invest consistently over time in something they understand. Warren Buffett. As a new year begins, many of us feel motivated to set goals, rethink priorities, and plan for a more prosperous future. But when it comes to personal finances and investments, the essential question is, what is the most important lesson for the year ahead? According to him, the answer does not lie in chasing quick profits or fleeting trends. The most important lesson is to adopt a solid, patient, and well-founded approach to financial growth. Considered the greatest investor of all time, he built his fortune on principles that are as simple as they are powerful. He does not rely on luck or extraordinary skills. Instead, Warren believes that financial success can be achieved by anyone willing to follow a few fundamental rules. In this video, we will explore the essential lesson he offers us to start the new year. Invest in yourself and in what you understand. Whether in the financial market, business, or personal skills, understanding what you are doing is what separates winners from losers. And the best part, this does not require advanced financial knowledge or access to exclusive tools. It only requires dedication, patience, and the disciplined application of timeless principles. Let's begin by exploring why this teaching is so valuable and how it applies to the new year. You will learn how he views investments as a long-term act driven by an understanding of real value and confidence in his own decisions. More importantly, we will see how you can apply these lessons in your life, starting today. So if you want to make 2025 a transformative year for your finances and investment mindset, this video is for you. Let's simplify financial success with Warren's wisdom and build a solid foundation for you to achieve your long-term goals. Ready to discover Buffett's success strategy and apply it to your upcoming year? Let's dive in. He has always championed a principle that seems simple, but is often overlooked. Never invest in something you don't understand. This idea is the cornerstone of his investment approach and financial philosophy. While many investors are lured by trends, complex assets, or promises of quick returns, Buffett built his empire by focusing on the basics, investing in companies and assets he deeply understands. But what does this mean in practice, and how can you apply it in 2025? Let's explore. With the rise of cryptocurrencies, investments in tech startups, and other financial fads, it's easy to feel pressured to jump on the latest trend. After all, no one wants to miss out on the next big success. However, Warren reminds us that financial success doesn't come from following what's popular, but from deeply understanding where you're placing your money. If you can't answer simple questions like, how does this business make money? What are the main risks of this investment? What is the long-term growth potential? Then it's better not to invest. Warren often repeats that ignorance is expensive. For him, investing in something without understanding what you're buying is the same as gambling. And gambling in the financial world rarely ends well. He's renowned for his ability to identify undervalued companies, those whose stocks are trading below their real value. He does this by focusing on fundamentals such as the company's business model, its financial health, the quality of its management. One of the most famous examples was Berkshire Hathaway's investment in Coca-Cola when the company was facing temporary difficulties. While other investors ignored Coca-Cola's stock, Warren saw its long-term potential. He knew the brand was strong, profits were consistent, and the consumer base was global. Today, this investment has become one of the most celebrated success stories in financial markets. You can apply the same principle when evaluating market opportunities. Instead of focusing on short-term stock price performance, concentrate on the intrinsic value of the asset. Ask yourself, if I bought this entire company, would it be worth it? Buffett believes the greatest investment you can make isn't in the stock market, but in yourself. This means acquiring skills that will enhance your ability to generate income over a lifetime. He often advises people to improve their communication skills, both written and verbal, continuously study business and economics, practice decision-making based on logic and data rather than emotion. The idea here is that knowledge can never be taken away from you. By investing time and effort into education and personal development, you're building a foundation that can sustain financial growth in any market. For 2025, how about setting clear goals to expand your knowledge? This could include reading business books, taking courses on investing, or even joining financial discussion groups. He uses the term circle of competence to describe the set of areas where you have genuine knowledge. He states, "You don't need to be an expert in everything, but you need to understand your area better than anyone else." If you work in the technology sector, for example, it might be easier to identify good software companies to invest in. If you have experience in retail, you may have a better grasp of how to analyze consumer brands. The key is to focus on what you already know and use that as a competitive advantage. In summary, the most important lesson for the coming year is to keep things simple. Invest in what you understand, be patient, and harness the power of knowledge as your primary weapon for financial success. Warren built his fortune by following these rules, and you can apply them to make 2025 a year of financial progress and personal growth. Buffett has a unique ability to make the complex simple. For him, the secret to investing isn't following the market, but evaluating businesses as an entrepreneur would. This requires a discerning eye to identify solid companies that are undervalued and have long-term growth potential. Let's explore how he applies this principle and how you can use it to thrive in 2025. He sees stocks as pieces of real businesses. He's not buying a piece of paper or a number on a chart. He's acquiring a stake in a company. That's why he asks questions such as, does the business have a product or service that people will continue to use over the next 10 or 20 years? Does it have a sustainable competitive advantage, such as a strong brand, exclusive patents, or a loyal customer base? Is the company managed by competent and ethical leaders? For example, when investing in Apple, Buffett recognized that he wasn't just buying a tech giant. He was investing in a brand with millions of loyal consumers and a unique ability to integrate hardware, software, and services. This type of thinking can be applied to your company analysis in the coming year. Ask yourself, if I owned this company, would I feel comfortable having it as my primary source of income? One of Buffett's favorite concepts is the moat, an analogy to the moats that protected medieval castles. For him, successful companies need an economic moat that shields them from competition. This moat can take various forms, such as cost advantage, where companies can produce more cheaply than competitors; strong branding, where consumers are willing to pay more for a well-known product, like Coca-Cola or Apple; scale, as large companies like Amazon and Walmart dominate markets through extensive infrastructure. When seeking investments in 2025, look for businesses with these characteristics. Remember, it's not enough for a company to be profitable today. It must have lasting protection against competitors. Buffett believes the price you pay should be less than the intrinsic value of the asset. This means looking for stocks of companies trading below what they're truly worth. How does he do this? He calculates intrinsic value by estimating a company's future cash flows and discounting them to their present value. While you don't need to be a financial math expert, you can adopt a simple approach to identify undervalued businesses. Compare the current stock price to the company's earnings. Check if the company is consistently growing in revenue, profits, and returns on equity. Evaluate whether there are temporary and fixable reasons for the price being low, such as bad publicity or a passing economic crisis. The key point is that you should never overpay for a company, even if it's excellent. Warren often says, It's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Another hallmark of his approach is his ability to stay calm, even during market turbulence. He understands that emotional behavior is the greatest enemy of investors. Many people buy stocks at high prices out of fear of missing out and sell at low prices out of fear of losing more money. Buffett does the opposite. He sees market downturns as an opportunity to buy great companies at low prices. He often uses the metaphor, if you have a favorite hamburger, you want the price to go down, not up. The same principle applies to the stocks of companies you like. How can you apply this in 2025? Avoid making decisions based on fear or euphoria. Have a clear investment plan and stick to it regardless of the headlines. He is the greatest advocate of the power of compound interest. He built his fortune by consistently reinvesting profits and letting time do its work. One of Buffett's most famous quotes is, "Wealth grows like a snowball, starting with a small, wet base and rolling from there." This means that by reinvesting your earnings and holding on to your investments for the long term, you can turn small amounts into a substantial fortune. That's why time in the market is more important than trying to time the market. In 2025, think of your investments as seeds planted in the ground. Don't expect immediate results. Give them time to grow and take advantage of the power of compounding. Warren is humble in acknowledging that he makes mistakes. He often says that he has learned more from investments that went wrong than from those that went right. What sets him apart is his ability to learn from mistakes and adjust his strategies. You can apply this in 2025 as well. If an investment doesn't work out, analyze what happened. Ask yourself, did I make an emotional decision? Did I fail to fully understand the business? Was I too hasty in selling or buying? Use these lessons to become a wiser and more disciplined investor. The new year brings a unique opportunity to reassess your goals, adjust your strategies, and most importantly, adopt habits that lead to a more secure and prosperous financial future. The most important lesson Buffett teaches us is simple but transformative. Invest in what you understand, be patient, and let time work in your favor. Warren didn't build his fortune by chasing quick gains or trying to time the market. He followed a philosophy that any of us can adopt, deeply understanding where you put your money, trusting the power of the long term, and avoiding influence from external noise. He proves that financial success isn't reserved for the fastest, but for the most disciplined. Imagine looking back at the end of 2025 and seeing that, thanks to his lessons, you built a solid portfolio, improved your personal finances, and grew as an investor. This vision isn't just a dream, it's within your reach. Financial success is a journey, not a race. Adopt Buffett's mindset, trust the process, and make this year the start of something extraordinary. After all, as Warren says, what matters is consistency over time. May 2025 be the year you lay the foundation for your financial independence. Did you enjoy this content? Don't forget to like this video, subscribe to the channel, and hit the bell icon so you won't miss more tips like this. Let's make 2025 the best year for your finances together.